Welcome to the Global Real Estate and Entrepreneurial Podcast. I am so excited to be here today. I am Nicole Forrester, real estate broker and professional financial planner, and I am honored today to have a really fantastic, high-quality guest for my Realtor compadres, not only in Ontario, but across the nation. Welcome to Jabri from Longevity Achieved. He is a certified financial planner. He is a chartered life underwriter, and he has some quality information to share with us today.
Thanks for having me, Nicole.
Absolutely. One of the things that I wanted to talk about is, so I'm a former professional financial planner in my former life. I worked for one of the big four, trained on Bay Street a few years back before I went into real estate. But I wanted to say that I've always had and been connected with financial planners. And I've been vetting out financial planners for a long period of time with that knowledge coming from that space. And what impresses me so much about Al and his group, Longevity Achieved, number one, the name of his company, Longevity Achieved, which is really this positive affirmation of what the goal is for their financial planning group, that you have Longevity Achieved. It's very much along the lines that I do with Nicole Bless This Home, which is putting forward that positive affirmation before you even have a touch with this group. So appreciate that very much, Al. And the other thing I wanted to say is what I believe that Longevity Achieved brings to the table is something that is so far beyond what the big four affiliates can bring to the table. And I'm going to have Al sort of talk about that. But I do want to let you know that he has a host of investment products that are available. He is not limited to the, let's say, the proprietary funds of one group. So he's very much a broker, which as a real estate broker, I really do appreciate. But he also has some incredible strategies that I have never seen any of the other big four financial planners bring to the table. So I'm excited to share that with my realtor friends today. So Al, tell me a little bit about your group.
Sure. Thanks for having us on again. And it's a warm welcome. I think you said right off the bat, we don't have those proprietary products. It's really good. It's a nice place to start. I want to be clear that it's not just about investments or insurance. Those are just kind of two tools that we use to help people achieve the results that they're looking for. And so it's more about we are a full service holistic advisory firm, and the holistic part just means that we're going to have that conversation to figure out what it is that you're up to, what everything that we're doing is for, so that we can create a plan, financial plan, and then a tactical roadmap, and then use some of these tools to help you get what it is that you're out to get. So I think that's important. And yeah, Longevity Achieved, that's that declaration, just like you said, it's great. So thanks for mentioning that.
Absolutely. We're putting that pebble in the water and it's rippling out. Even as you name us and name our taglines, I just absolutely love that principle. One thing that I'd like to bring up, and we'd really like to hone in and talk about today, is the PREC. Can you tell me what a PREC is, who should care about it, and what benefit it has?
Sure. So PREC, or a personal real estate corporation, is a vehicle that the government passed, and it was lobbied for by your associations, the variety of associations, specifically in Ontario. Since 2020, realtor professionals have been able to incorporate their business. So all that means that you've joined the likes of, medical professionals, lawyers, accountants, financial planners. We've all been able to incorporate. And why that's important is when you incorporate, you turn yourself from a sole proprietor to a business. And with that kind of designation as a business, you get control over your income, meaning how much you pay yourself and when you pay yourself. And subsequently, from that control, you also get control over how much tax you pay and when. And that's the magic. It's like you can choose when you get paid and how you get paid. And, therefore you kind of spread out the tax. You can't always eliminate the tax, but, that's financial planning. That's tax planning. And over time, you'll pay way less. And we've done a few different studies, and we think a traditional realtor kind of doing well in their career over the next 10 years horizon could put away more than $1.3 million just by incorporating.
Wow, that's exciting. So, as a realtor and with a financial background, I'm part of this massive global real estate group. We're the #1 producers in the world. And I'm, happen to be with the fastest growing group, and they're a bunch of young guns. I'll say this, they're making money very quickly. But as a financial planner, I recognize that it's not just about producing today, it's about shutting our back door. It's about looking at not overweighting in real estate. Realtors, and I know all the realtors out there can relate to this. We are so heavily overweighted in real estate with our holdings, with our investment properties. The other thing I wanted to say is a PREC is not for everyone at every moment. And I know that the $300,000 threshold is something that I've used as an earmarker for when a PREC could be and should be beneficial for someone to use, as well as, having that plan. And I sort of wanted you to talk about sort of like who and when should we be using this PREC for our realtor friends.
Great question. And thanks on that front. I'm glad we're just trying to keep up with you guys, right? So you're doing great, fastest growing team. I know you got a lot of young guns. So for those people who are in that group, wherever you are, beginning of your career, later on in your career, maybe even mid-career, 300,000, that's an easy number. Okay. If it's 300, most definitely it's going to be correct for you because you just don't have enough expenses to write off. So that means there's going to be some deferral of income. So you can actually keep some money in your corporation. What's the magic number though? Really, it's probably the moment you reach that threshold where you're earning more commissions than you're regularly taking in or spending, right? So let's just say maybe you're $175,000 a year earner. Okay. If you've only got 100,000 worth of expenses, you can defer income tax on that 75 grand. Okay. And the more you make, the greater the impact of that deferral. Okay. So let's just say it's somewhere between 100 and 300 where you got to kind of make that call if it makes sense for you based on what you spend. But after 300, if you're not incorporated yet, then I promise you're paying more tax than you should.
Right. And, as salespeople, we all know that, it's impossible to hit a target that you don't name or your goal.
Yeah.
You're throwing darts at a wall opposed to a bullseye. So, I want to really relate this to realtors in our sales terms that working with someone like Al to come up with a financial plan to take you from where you are today, even at $100,000 earner, to where you want to be between 300 and 500, and then God willing, retiring and not expiring,
Yes.
that you can help do that.
For sure. Nicole, I think the big thing to take away here is you got to set your targets. Just like you said, you want to know what you're shooting towards. But it's not just about the financial planning and, how much money should I put away for investments? I mean, you want to own real estate, I imagine. You want to maybe buy commercial. You want to get a few doors, maybe a multi-unit. You want to do some planning on it. Should I own this corporately? Should I own it personally? How much should I pay myself? Put it in my TFSAs, put it in my RSPs. I mean, there's like so many questions to ask yourself. And it's a weight, and you want to be able to focus on what you do best, go out, be with people, and be a great realtor and get that income. So working with a planner, working with somebody, at least taking care of your planning perspective there from finances, you are crossing your T's, dotting your I's, where you're going, how much you want to be able to make, and how to optimize the outcome. And I think that's what's really important. It's like, it's just a little bit of investment up the front end gives you a greater return on the back end. I think that's the underline that everybody should take away.
Absolutely. And one of my mentors, Connor Steinbrook, is always talking about how everyone loves free stuff. And what I'm going to say is, and traditionally, when we're taking out new buyer clients, it's exciting because you have the benefit of all of our knowledge as a professional for free, at least for now in Canada, where the seller picks up our commission. You too give us the benefit of all of your expertise for free because your commission is paid by the number of investments and the investments that and the commission from the investment that is purchased, correct?
So good. Yeah. So we get two vehicles in how we get compensated. It's either through investments or through insurance sales. But what's really cool is that we can help you in a lot of different places. So we're going to do tax planning, we're going to do financial planning, we're going to do estate planning. So those kind of three things are actually very different. And we don't get compensated for doing those things. But just like a realtor, you show homes, you're not getting compensated for showing the home. You get compensated when they buy a home. It's the same thing here. So take advantage of that financial planning, that tax planning, that estate planning. And then, now you're at least empowered, you're armed with new information, and that's yours to keep. That's your proprietary info now. And then if you feel chemistry and it makes sense and the roadmap makes sense, you start, and then it won't cost you, doesn't cost you a thing. Actually, you're already paying for advice, okay? And you might want to say more about this, but if you're invested at a bank with a little bit of your investments, those are all built in to what you pay. So likely what most Canadians don't know and realtors don't know yet is that those fees that you're paying are supposed to come with advice. Otherwise, you're just they're marking up a product and being a middleman or a middlewoman, and that's not right. So it doesn't actually cost you any more. In fact, many cases you're paying less and getting the professional advice of a planner, and that's a pretty unique outcome that you should take advantage of.
I love that. And absolutely. I will say this, and any lawyer will tell you, anytime you're working with a bank or an affiliate of the bank, the interests of the bank come first before the client. A lawyer will tell you that. Maybe that's a surprise, but it shouldn't be. When you're working with brokers, such as yourself or me in our industries, we put our clients first, and that's part of our fiduciary duty. Not sure why it's not the bank's fiduciary duty, but we won't touch on that. And what I will say, having come from one of the big four, from the securities arm, is that the what you're talking about with the insurance planning, tax planning, investment planning, estate planning, these are all siloed off in their investment arms, and you're paying fees not just built in, but also on top for each of those siloed type services. So to have you have that available to us in a one-stop shop is not only more efficient, it's a lottery win as far as I'm concerned. And for high producing realtors, 100%, this is where you want to go, and to sort of get your financial freedom, because this is something that realtors are always struggling with, time traded income. We need to stop being so overweighted in real estate, and Al can help us with that on all fronts, and also move to multiple streams of income through planning, to move away from constantly producing. We're only as good as our last sale, so we want to sort of move away from that by careful planning. Something I wanted to ask you about, and I love, is the Duke of Westminster Principle.
Yeah, you got it. Do you want to talk about it?
Yeah, please tell us what it is and how it applies and should apply to everybody.
It's a cool concept. So Duke of Westminster Principle is effectively Duke of Westminster did some great tax planning, okay, and arranged his affairs in a way to minimize the amount of tax. Okay, so now we're not talking about tax evasion, we're not talking about tax avoidance, we're talking about tax, like just organization. Okay, and so the CRA took the Duke of Westminster to court, to the Supreme Court of Canada, in a fight to say that the way that he had set up his affairs was not fair. And the Supreme Court of Canada judged or favored on the side of the Duke of Westminster, saying that the Canadians and the Duke himself had an opportunity and was allowed to arrange his affairs in a way to minimize tax. That is our right by the Supreme Court of Canada, to arrange our affairs in a way that minimizes the amount of tax we pay. And so if you're not taking advantage of that, you're leaving something on the table. And I'm not against tax, okay? I've always been taught and learned that if we pay some tax, then that's kind of a good problem because you must have made an income. So congratulations to you if you're doing good income and you pay some tax, okay? That's better than having the problem of no income. That's number one. So congratulations. Now that you're on the other side of it, though, pay what you need to pay and not a penny more. And so if you employ the Duke of Westminster Principle, then that's the way it ends up.
And it's our right that we won through the Supreme Court of Canada. That's right. So, it's so funny because Canadians are so conservative fiscally, and we feel like we're getting away with something if we're minimizing our taxes. So I want all Canadians and realtors particularly to know that it's our right to organize and minimize our tax, and that we're being responsible Canadians by doing so.
And Nicole, just on that topic, it's really straightforward. There's nothing nefarious going on. I'm not talking about offshore accounts. I'm not talking about setting up a corp in the Cayman Islands. Okay. All that stuff that we see in the Wolf of Wall Street. Like, it's not like that. Okay. The top earning Canadians in Canada are doing very, very simple things. RRSP contributions, if that's your vocation, taxable dividends from Canadian corporations, capital gains. I mean, there's nothing nefarious going on here. Okay. So all you want to do is make sure that you cross your T's and you dot your I's and reduce the amount of tax you pay, because that's just good defense. Okay. And you need a good defense to win the game too.
And we know, as hockey being one of our, I know it's not our national sport, but I think it is in our hearts. We know that a good defense is a great offense. So
Totally.
100%. One of the things, and I know you mentioned some of the ways that we minimize tax with investments, but one of the things that really caught my eye about your group, which I find so sophisticated. So I too had the LLQP, which was my insurance license for insurance investment products. And I know that you're a certified life underwriter. So the way that you are using insurance annuities within the PREC for realtors is brilliant. Can you please comment a little bit on that for us?
I sure can. So for those realtors that are they're producing well, they're doing well, and there's some money left over in the corporation after they've paid themselves, and you've done all the great things. You bought some properties, maybe you've got a holdco, or maybe you don't want to be a landlord, right? Because some realtors, like, that's an active investment, by the way. Obviously, you got to own something, you got to be a landlord, you got to do those things. So it may not be the first choice for you. Fine. So you've done all the great stuff, and there's money left over in your corporation. How do you get it out? Traditionally, you've had to pay yourself. And when you pay yourself, it's either a salary or a dividend, and then there's income tax attached to that. So we use life insurance as a tool to help you liberate, extract whatever's left over in your corporation into your own life, into your own hands personally. And I can talk a little bit about how that's structured, but I want to just highlight something here. Okay. There's only 4 vehicles available in Canada where you can grow your money tax-free, Nicole. And principal residence is one of them. Okay. We all kind of, just to make sure that we check the easy one off. Okay. Principal residence is one of them. The second one is a tax-free savings account. It's in the name. Okay. Tax-free savings account. You're allowed to grow your wealth in a tax-free savings account, tax-free. The third way is lottery winnings. Okay. So 649, right? I don't know when you're going to win the 649. We can't predict that. Okay. And the fourth way, this is only one of 4, is through life insurance benefits, death benefits, and life insurance investing. Because everything that happens in an insurance policy in Canada can happen in a tax-free manner or a tax-efficient manner. Okay. So with that out of the way, I want you to think about what's possible with the money that's left over in your corporation. A realtor can take the money that's invested in their corporation, put it inside of an insurance policy, which basically operates like a tax shelter. And then, just like a house, with that equity in that house, you can take that insurance policy to the bank and apply it as collateral and get a personal line of credit where you can draw down on that totally tax-free, because, as you know, we don't pay income tax on borrowed funds. Okay. So this is one of those special magical ways where you can take retained earnings in a corporation, use a shuttle, spend the money in your life, buy a property, top up your TFSA, do whatever you got to do. And you've totally eliminated the tax.
I just love this. This is so magical to me, Al, and this is what brought us together. Was this strategy, which I really don't hear anybody talking about. It is so relevant, especially with the cost of living going up now. We need to minimize our taxes more than ever and be more efficient in the way we operate. Like we need to
Yeah.
close those back doors and have better goals. I just find this a brilliant strategy.
Thanks. And there's two ways to set it up for those. Everybody's got different goals. You got to remember, it's all got to be goals based, right? We're not just doing it to do it. Some want to access money early, and so there's ways to structure this where you can eliminate the tax, get it out into your hands from your corp within 5 years, where you're totally tax done. Okay, and there's other ways to set it up like a pension, where you can fund it for a matter of years and then create a pension for yourself that lasts for the rest of your life. And I think that's important to highlight because sometimes, like you said, close that back door. You want to structure yourself in your life like we're not getting a pension. We're self-employed. You are your pension. So all of your income earning years right now, you want to really set yourself up for the future. And you can use these whole life, like these corporately owned cash value policies, to set up your pension so that it's inflation adjusted. You're getting that money for the rest of your life. And that's you taking care of your future you.
And this has been available to doctors and lawyers for a longer period of time. This has only been available to realtors since you said 2020. Is that correct?
That's right, 2020. And doctors have been able to do this since 2006, lawyers since 2001. Like it's been available, and now realtors can do it too.
That is fantastic. So, Al, you have given us so much to think about, so many ways we can close our back door and stop being overweighted in real estate and become more tax efficient. Where can people reach out to you to start investigating all these amazing possibilities?
So you can reach out to me I'm on LinkedIn. That's kind of my channel of choice. So you can reach out to me there at Aladdin Jabri. I'll send you the information as well. And our website's longevityachieved.com. You've got our full team there. There's a chat function. You can ask your questions there. You can set up a chat. And then just so everybody knows, we got 15 advisors, 12 different languages. We're women owned. Okay. And our management team is 50% women, made of women. And the reason that's important is because Nicole, you guys see stuff that we don't see. Okay. So it is super important on that front. So, you pick your flavor, so to speak, right? You find somebody that you really mesh well with. And that's another important thing. Love your financial planner, love the person you work with, choose somebody, because this is intimate conversations. These are really personal conversations, and you got to enjoy who you're talking to. Don't just get stuck with whoever you inherited at the bank. This is your person. You get to choose them. And so that's, I think, really important to highlight.
And I want people to know, like I said, I'm a former financial advisor and stockbroker. I have chosen Al. This gentleman is going to be my personal financial advisor. So I don't want you to think that I'm just advertising for him. I'm letting you guys in on a secret that I too will be taking advantage of. I think that everything that you guys are offering is amazing. The fact that you're so diverse and you have gender equality just makes me love you guys more. But the fact that you're also available to everyone in Ontario and across Canada is fantastic. So if you're a realtor out there and you need some help and you don't know where to start, here's your gift.
Thank you. I'm in sunny Midland here. If you know, I was at a team meeting with another group of realtors. So we're there wherever you are. We want to be. It's really great. Thanks, Nicole.
Fantastic. Thank you so much for talking to us today. I'll appreciate you.
Pleasure.